All right, so there's an important distinction I want to draw in this quick video here. If you're watching this, then you are a real estate investor who may or may not be serving as your own general contractor on your jobs. We're talking today about the difference between premises liability coverage and construction liability coverage. When you buy an investment property, the insurance program, if it's written correctly, is going to have property coverage as well as liability or casualty coverage. That's where property and casualty insurance, or P&C insurance, comes from. Both components are important for you as a real estate investor. The liability coverage is usually premises liability. It protects you against bodily injury and property damage liability that occurs on the premises listed in your insurance policy, 123 Main Street, for instance. Completely different set of coverage is construction-related liability. Typically, this is going to be on paper as General Liability Class Code 91580, which is executive supervisors or general contractors of a construction project. Anything construction-related, rehabbing, flipping, remodeling, ground-up construction, anything like that is not going to be covered on a typical real estate investment property policy. Simply put, if you're doing your own GC work, or if you're in charge of any GC work that's happening on a property that you own, you should be having a separate standalone policy that's written on an annual basis, one policy per year for all of your jobs. It is not project specific like a real estate investor property that has property coverage and liability coverage packaged together. You're going to see that there is a subject premises listed on the policy. There is no premises listed on a general liability policy that's intended for construction-related exposures. So if you're a real estate investor who is also serving as your own general contractor or executive supervisor, construction manager, whatever you want to call yourself, you need to make sure that you're getting a separate standalone policy that protects you against all of that construction liability. And bonus, this is a really big important thing here for you flippers out there. There's also built into the RiskWell programs that we sell completed operations liability coverage. And what that means is if you have bodily injury or property damage after the fact, after you sell a flip house and 6 months later something bad happens, there is a very good chance that you have coverage for that exposure where something happens. It is already a completed operation. You certainly don't have any coverage for that on the investment property policy that you purchased. It doesn't have anything close to the coverage you think it does if you're doing any kind of construction-related work on the premises. We can help you with all of this stuff and anything else you need in your real estate investment operation or your construction or other trade operations. RiskWell 100% exclusively works with real estate investors and privately held businesses. Life is risky. RiskWell. Talk soon.